In the world of cryptocurrency, it's said that there are countless ways to strike it rich, with some strategies boasting odds of over 100 to 1 for massive wealth gains. Among these, the only well-documented method is what's known as pyramiding. The champion of a trading contest in China used this method to secure a 194-fold return in just 6 days. Following its successful trial, the well-known figure within the Chinese investment community, Lunch Investment, applied the pyramiding strategy to turn $2,000 into $11.4 million. Subsequent public disclosures of live trading sessions also reported multiple instances of profits multiplied by tens. It can be said, learning the pyramiding strategy represents the most promising avenue for small investors to break through. Hello, welcome to the Speculation Lab. I'm about to reveal this entire strategy to you, but let me be clear up front. This method comes with extremely high risks, with the probability of losing everything exceeding 90%. If you were to invest $100 daily, you might end up losing $36,500 over a year. However, you'd also stand the chance to make between $1 to $10 million at least once, have 5 to 10 opportunities to earn $100,000, and multiple chances to triple your investment or more. Catching just one of these opportunities could make you rich. If you've decided to keep watching, make sure to hit the subscribe button and stay tuned till the end. This decision could save your wallet this year. The first step into the strategy involves understanding the pyramiding profit table. Starting from the point where Bitcoin breaks through $50,000, we use $1,000 of margin to open a perpetual long position with 50x leverage. So far, this has yielded a profit of $31,000. Moreover, the position continues to leverage at a safely low rate, aiming for profits of $255,900. The initial capital is $1,000, with margin set to the isolated margin and leverage cranked up to 50x, making the position's value $50,000. During the process, any doubling of the capital necessitates an additional investment, but with each increase, it's crucial to gradually decrease the leverage to account for trading friction and the implicit volatility. At this stage, a drop of about 1.5% could lead to a liquidation, essentially acting as a stop-loss. When the price rises by 2% to $51,000, the capital doubles to $2,000. At this point, we need to reduce the leverage to 30x and reinvest the profits, keeping the position's value at $60,000. Additionally, setting a stop-loss at the entry price can protect the initial capital. After a 5.4% price increase to $52,700, the initial capital becomes $4,000 with the leverage reduced to 20x, making the position's value $80,000. Once the price rises by 10.6% to $55,300, the leverage is decreased to 15x and the position's value climbs to $120,000. This is, in fact, the most critical phase of the strategy. Initially, the key is to select cryptocurrencies expected to double in price and that can rapidly surge by more than 10%. This allows for quickly reducing leverage and enlarging the safety margin. When the price increases by 18% to $59,000, the leverage can be lowered to 10x, making the position's value $160,000. At this point, many may hesitate about whether to continue with the strategy since just a 9.5% price pullback could trigger a liquidation, resulting in significant losses. Moreover, with the price having already risen substantially and reaching a round number, a sharp decline is likely. Many might choose to take profits and close their positions during this phase. However, successfully enduring until the price hits $65,000 with a 30% increase and reducing the leverage to 5x considerably enhances security. A 19% drop would be required to trigger a liquidation, providing a larger margin of error and more time to react. If the price could reach $78,000 or even the ultimate goal of $156,000, then a 255.9-fold increase to $256,000 would be realized. Lunch Investment, after numerous calculations of win rates and statistical analyses of Bitcoin's volatility, concluded that with pyramiding, there's roughly a 1 in 20 chance of achieving a return of over 100 times. For simplicity, all other outcomes are considered a loss, resulting in a win rate of 5% and odds of 10,000%. He suggests dividing the amount you can afford to lose into 25 portions, for example, turning $2,500 into 25 lots of $100 each, and then applying a 5x leverage at the right moments to pyramid up. After reaching a profit of about 100 times, you can choose to take profit and exit. He previously disclosed a pyramiding plan where he entered with 0.1 Bitcoin when it was priced at $20,300. That means the initial capital was $2,030, leveraging up to 50 times, continuously adding to the position until the price reached $23,041.64. After reducing the leverage to 10x, he maintained this level, expecting to secure assets worth $65,740.48, potentially reaching a gain of over 100,000 times to $1.077 billion USDT. A retrospective look at this trade shows that running such high leverage, a drop of more than 9% after adding to the position at $30,668.42 would have led to liquidation, despite the capital already having increased 96 times. At that point, it was near a 100 times profit. If taking profit or, as mentioned, reducing the leverage to 5x or lower, this trade could have gone much further. When using pyramiding, the swing from profit to loss is common. If you're considering this approach, be prepared psychologically for this volatility. If you can't handle the excitement, it's better not to play. Even with reduced leverage, the risk remains significant because leveraging up gives others a chance to take your wealth. In 2019, Lunch Investment decided to test the waters of Bitcoin with a bit more than $5,000 in hand. With a keen eye on the market and a steady hand on his 5x leveraged bets, he rode the bullish wave all the way up to when Bitcoin reached $14,000. By this point, his portfolio had expanded significantly, reducing his effective leverage to just over 1x and inflating his holdings to a staggering 4,000 Bitcoins in value. However, the crypto market is as unpredictable as it is volatile. On September 25th, a dramatic swing in prices on a major trading platform obliterated his position, leaving him to reflect on this turn of events as the costliest lesson of his life. The second step is selecting the right exchange and cryptocurrency. This is crucial because the platform you choose and the coin you trade can significantly influence your success with the pyramiding strategy. Big-name exchanges like OKX, Binance, and Bybit are your safest bets due to their depth and lower risk of slippage. When it comes to pyramiding, sticking to Bitcoin is advisable. Its relative stability compared to altcoins means you're less likely to face a sudden margin call. When exploring altcoins, there are two types you'll want to avoid. The first type includes those with a history of wide fluctuations, experiencing sharp rises and falls. Investing in these is often a direct path to losses, as their volatility can quickly erode your capital. The second type is the coins that fail to rally even when the market is booming, indicating a lack of interest from both individual and institutional investors. Buying into these stagnant performers is likely futile, as their lack of momentum makes significant gains unlikely. Two types of cryptocurrencies are particularly worth attention. First, those that show remarkable resistance during a market crash in a bull market. It's not necessary to delve into why they resist falling. Simply put, if a cryptocurrency doesn't drop much during a crash, it's because there's buying interest even in tough times, indicating a potential for higher gains later on. Second, focus on the leading coins in the current hot sectors. Observing on-chain data and trading volumes can reveal significant movements of funds. Cryptocurrencies that attract attention during a bull market tend to rise quickly, sometimes by more than 10%, allowing for rapid profit and leverage reduction. The third step is deciding when to enter the market. After selecting your cryptocurrency, 3 effective entry methods stand out. The first involves adding to your position upon a breakout, which is not advisable in a fluctuating market. Instead, look for a prolonged consolidation phase and enter after a significant volume breakout. For this approach, you might consider the True Breakout strategy by Ouyang and the Breakout strategy by Swedish trader Christian. Using pyramiding in these momentum-driven breakout strategies tends to yield a higher success rate. The second approach is to capitalize on rapid price drops of more than 10% during a bull market trend. Such sharp declines often have a high probability of rebounding, presenting an opportunity to initiate a pyramiding strategy at the right positions. The third strategy involves entering the market after a rebound of at least 20% from the lowest point, followed by a long period of consolidation and a volume-supported breakout through the 4-hour or daily Vegas channels. This scenario usually marks the start of a new trend. Beyond pyramiding, the rolling method used by the Otaku Bitcoin, who grew his portfolio from 1 million to 200 million, is also worth studying. He suggests holding onto a cryptocurrency if there are strong reasons to be bullish on it after entering a position. During this hold, if there's an appropriate moment, it's advisable to add to the position in line with the trend. The appropriate moment could be during a convergence breakout within the trend where you can capitalize on the primary uptrend by quickly closing out the added positions and retaining only the base position. Alternatively, it's opportune to increase trend-following positions during trend pullbacks, near moving averages, previous highs and lows, or supply and demand zones. This process of adding to positions is referred to as rolling. To wrap up today's contents, let's quote a sage piece of advice from Lunch Investment. If you can afford to see your investment go to zero 25 times in a row with pyramiding, please embrace the outcomes without blaming me. I'm merely sharing a strategy that I believe could be more effective. And remember, significant gains are only real once you cash out, otherwise it's all just numbers on a screen. Alright, don't forget to hit the subscribe button to stay updated with more profitable trading contents. I wish you a good morning, good afternoon, and good evening. Goodbye.